Hello and welcome. You're watching Market Cafe with me, Ankur Mishra and Ankita Saxena. In next 1 hour, we'll decode all the news around the globe for you. We'll also tell you which are the stocks to watch. But let's get started with US markets first. It's a sea of green in US.
Absolutely, Ankur. In fact, ever since the news of the ceasefire has broken out, we have been seeing a sea of green. In fact, yesterday also the US markets did very well. In fact, Dow Jones was trading with gains of almost 500 odd points, 1% uptick coming in on Dow Jones. Nasdaq also picked up almost 1.5% in trade. S&P 500 also traded up 1%. Now remember, S&P 500 is sitting its all-time high. It's hovering around its all-time high. In fact, if you look at the futures also, futures are a little changed as of now. But the big thing is, one, the news of the ceasefire, and the second are the crude prices that have come off sharply. Ankur will take us through the details of the crude prices, but a sharp downtick in crude prices, which has actually touched $80 a barrel, has now come off. It's sub $70 a barrel, and on the back of that coming off, markets are rallying, and as I mentioned, Dow Jones, S&P 500 and Nasdaq Composite, all of them traded with gains of 1+%. But Ankur, take us through how crude is really faring, because crude is something that we are watching very, very closely for Indian markets as well.
Yes, definitely it has an impact on Indian markets, and it is down more than 20% if you talk about highs. WTI was hovering around $65 and Brent near $68. This has happened after, as Ankita was mentioning, it has touched $80. But the easing of geopolitical tensions did provide this kind of downtick on a second straight day. Apart from that, US crude inventories also fell for the fourth straight week, and natural gas prices fell further from 11-week high. And more than that, also keep an eye on dollar index, which was down below 98.
Alright, so that's how the crude is faring. So that is something that we are watching very closely, and that the crude prices also, remember, the dollar index movement is also something to watch out for. Dollar index is also a sub 100. In fact, there is news of the dollar weakening. We also saw how China is really building on its yuan, because as far as dollar is concerned to yuan, that is also seen gaining strength. So currency movement is also something that we are watching out for. But for now, let's take you through what are the global cues to watch out for. And as far as the global earnings are concerned, we have Micron, we have General Mills and Jeffries that will be reporting its quarter earnings. Back home, we have a couple of fundraise, Siet, Canfin Homes that are mulling fundraise. We also have Aegis Logistics that trading ex-dividend. Also, there are two IPOs that are opening up. That one is HDB Financial and Sambhav Steel Tubes that are opening up for subscription. Also, we have the listing of RC Infra IPO that will be listing on the bourses as of today. So these are the cues to be watching out for. And as of now, GIFT Nifty is trading up 85 odd points, hinting towards a positive start for our Nifty as well.
Definitely lots of event to watch, and GIFT Nifty is definitely indicating a positive start. But shifting focus to news, tensions are cooling, at least on paper, as Israel and Iran stick to a fragile ceasefire, and that is brokered by Donald Trump. Airspace is reopening, markets are cheering, and oil is sliding. But details emerge on the much-hyped American airstrike, and early US intelligence assessments say they failed to destroy Iran's core nuclear facilities. While Trump and his defense secretary claim total obliteration, intelligence reports suggest Tehran's centrifuges are still spinning and its uranium stockpile remains untouched. The White House has rubbished the leaks, calling the assessment flat out wrong. Let's also hear out to Donald Trump what he had to say.
I don't think so, but I'm not happy that Israel's going out now. There was one rocket that I guess was fired overboard. It was after the time limit, and it missed its target. And now Israel's going out. These guys got to calm down. It's ridiculous. I didn't like plenty of things I saw yesterday. I didn't like the fact that Israel unloaded right after we made the deal. They didn't have to unload. And I didn't like the fact that the retaliation was very strong. But in all fairness, Israel unloaded a lot. And now I hear Israel just went out because they felt it was violated by one rocket that didn't land anywhere. That's not what we want, I'll tell you. And I'm telling you, I'm not happy about that, Israel, either.
And well, as the tensions continue between Israel and Iran, we also spoke to experts on the standoff and how it will affect the global markets. Let's go across and listen in.
So I don't think Netanyahu has actually achieved his ambitions as yet. And of course, his other factor is a personal one, which is that if the government falls, which it could well do once there is a complete cessation of hostilities, he may well find himself in court over the ongoing corruption case against him, with the possibility of finishing up in jail. So Israel still potentially a live issue. As far as Iran's concerned, primary objective clearly maintaining the regime, avoiding regime collapse, and I think the mullahs have decided that the least bad way to move forward towards that objective is to cease hostilities for now, at least, regroup, and as Mark suggested, probably, at least I think he suggested, I want to be careful not to misquote him, probably in due course to start again with a new and even more secret uranium enrichment program.
Still, the dollar is very overvalued. Last year, Europeans bought a record amounts of U.S. stocks. And I think that we're seeing a bit of buyer's remorse. And so there's a big portfolio allocation taking place. But I'm excited about the prospects for India. You know, last year, India bonds became included into some of the global benchmarks. And I think it's just a matter of time before the Indian stock market is as well. And this year, we're already seeing investors anticipate it. For example, this quarter alone, we've seen foreign investors buy Indian stocks.
Moving on, Israel's Prime Minister Benjamin Netanyahu is warning Tehran to rebuild your nuclear program and we'll strike again. In a national address, he called last week's assault on Iranian sites a historic victory, claiming it spared Israel from annihilation. He praised Donald Trump for unprecedented support and insisted there will be no let-up in Israel's campaign against Iran or Hamas. Meanwhile, Israel's defense minister confirmed the ceasefire will hold as long as Iran abides by it, and wartime restrictions across Israel have now been lifted. Schools, flights and businesses are back, but the rhetoric remains on a war footing.
And Trump may get what he has been battling for over the past few weeks. The US president has been nominated for the 2025 Nobel Peace Prize. The nod comes from Republican Congressman Buddy Carter, who praised Trump's extraordinary and historic role in brokering the ceasefire between Israel and Iran, ending what's now dubbed the 12-day war. In his letter to Norwegian Nobel Committee, Carter credited Trump for averting a wider regional conflict and taking bold steps to curb Iran's nuclear ambitions.
And moving on, US consumer confidence took a hit in June, falling to 93, its lowest in nearly 2 years. As job market concerns mount, the Conference Board's index dropped over 5 points, with worries about employment spreading across age, income and political lines. Fewer Americans now view jobs as plentiful, and optimism around future income is fading.
And US Fed Chair Jerome Powell is standing firm. He is telling Congress the central bank is not in a rush to cut rates until there's more clarity on how tariffs are affecting inflation. Powell warned inflation is likely to edge higher in May, with the Fed's core metric expected at 2.6%, up from 2.5% in April. Now, despite solid growth and a strong job market, he said the Fed has an obligation to prevent an ongoing inflation problem. The cautious stance could further irk Trump, who has renewed his attacks on Powell. Powell will continue to testify later today.
And after Fed important comments coming in from New York Fed President John Williamson, who says no rush to cut rates just yet. He mentions it's entirely appropriate to hold rates steady for now. He expects inflation to cool to Fed's 2% target over the next 2 years, though it may hover around 3% this year. Williams also sees unemployment rising to 4.5% by December, signaling a softening labor market. Both he and Fed chairman are urging patience as the full impact of past hikes and new tariffs play out, despite some officials pushing for a possible rate cut as early as July.
All right, moving on to the next counter, which is Nvidia. Nvidia CEO Jensen Huang has sold 1 lakh shares of the company's stock. Now, the sales are worth nearly $15 million. Now, remember that the transactions are the first sale in Huang's plan to sell as many as 6 million shares of Nvidia through the end of 2025.
And before we slip into a short break, let's also take a stock of what happened on Dalal Street in the previous session, and the levels needs to be watched out for today. Snehi is joining in with all that details.
Well, yes, good morning. Let's take a look at how the markets performed yesterday and what are the levels that we can expect to see at market open today. First of all, let's talk about market performance yesterday. What started off with a big bang in yesterday's trading session simmered down quite significantly towards market close, and we managed to close the Nifty above the 25,000 mark with a 0.3% gain, but much lesser, almost a 1% cut from the day's highest point came in for the Nifty yesterday. If you take a look at the Sensex closed with gains of 0.2%. Nifty Bank also, in fact, Nifty Bank has outperformed the entire market in yesterday's trading session. A 0.7% uptick is what we saw on Nifty Bank yesterday, and Nifty, it's not only the private banks, it's also the PSU names like Union Bank, Canara Bank, all of them participated very nicely in yesterday's trading session. From the Nifty 50 pack, you had names like Adani Ports, Jio Financial, Shriram Finance, Grasim, that did very well, held up with gains of about more than 2%. On the flip side, pressure continued to build on ONGC, Power Grid, IndusInd Bank, NTPC and Trent from the Nifty 50 market. It was the day of the broader markets yesterday because they have outperformed the benchmarks by almost 0.5%. A 0.7% uptick coming in across both the mid-cap and the small-cap indices is what we saw in yesterday's trading session. Sectorally, like I mentioned, PSU banks did brilliantly for themselves. All the sectors closed in the green, barring Nifty Media. That's the only sector that has closed in the red yesterday. But you have metals, financial services, banks, auto, energy, FMCG, pharma, realty and IT. That's the pecking order in which the markets closed in yesterday's trading session. Now let's talk about some technical levels to watch out for in today's trade. When we interacted with our technical experts yesterday, Kunal Bothra and Vinay Rajani, both of them had this view. For Kunal, he sees resistance at 25,250 and support at 24,850. And for Vinay Rajani, he sees resistance at 25,200 and support along the 24,700 marks. This band is going to be crucial to watch out for when the markets open today.
All right, it's time for a quick breather on Market Cafe. On the other side, we'll get you more updates. Stay tuned.
When the stakes are high and the answers are elusive, there's one voice.
The focus was on safety measures and regulatory compliance. My colleague Sameer Dixit is joining in with more details of that story.
Yes, post the tragic aircraft crash incident in Ahmedabad, DGCA, the aviation regulator, is not just carrying out tough scrutiny of the airline, but also of the airports. What we are picking up from the officials that DGCA carried out intense surprise audit of the major airports across the country. So, for example, of Chennai Airport, Mumbai, Delhi, Bangalore. So, these all airports, a safety audit was done by the DGCA. And shockingly, there were multiple safety violations that was found by the safety inspectors, by the DGCA officials. For example, at one of the airports, the central line of the runway, it was faded. Now, this central line actually helps the pilot to guide the aircraft properly, and this central line was faded. In another instance, at one of the place, DGC officials found that the simulator which is used to train the pilot, they were running on outdated software. Now you can imagine that pilot training, that too on an outdated software of a simulator, that means that is raising a severe risk as well. Additionally, at multiple airports, DGCA officials found that the aircraft maintenance engineers, they were not following the mandatory safety protocols at a few places, at few airports. Even they were not able to follow the protocols, the safety protocols, how to actually maintain the aircraft, that manual or the guidelines, they were unable to follow it. Even in one of the cases, very shockingly, a domestic aircraft was supposed to take off with a worn tire. The tire was actually not in a very serviceable condition, and because of which DGCA officials, they stopped that particular flight. and it led to the delay of that domestic flight. But it was put into service only after that particular tire was replaced. Now, just imagine that how many safety lapses are there which has been found out by the DGCA official in their surprise safety audit. Now, these operators, they have been given a 7-day timeline to initiate the corrective action. In addition to this, they have also been asked to submit a CAP, a corrective action plan, whatever the it has been asked by DGCA, and this corrective action plan has to be submitted to DGCA. And not just this, going forward, DGCA will conduct this sort of surprise safety audit in coming months or days, and if these violations are found once again, then these airport operators may attract financial penalties, and also this can result to the cancellation of the license as well. But definitely that's a very shocking or the surprising part, that there are multiple safety violations at these airports, which has been highlighted by the DGCA in its safety audit report.
Thanks, Samir, for all those details. So DGCA ensuring your safety comes first, but we also spoke to a host of aviation experts regarding this inspection. Let's listen into their take.
The problem is far, far greater than you have made out to be. First of all, when you say DGCA is doing these audits and etc., who in DGCA is doing it? First of all, DGCA has been filled up with your bureaucrats. You do not require bureaucrats to do these things. They have some pilots who are inspectors, but even the pilots have to be trained in accident analysis to be aware of various things to be done to prevent accidents. Let me point out just a few things there. I can point out 100 items and you'll be sitting with me for the next 10 days on this channel. But let me just point out the major thing, that's why this last aircraft crash was because the buildings were in the vicinity of the airport. That is the tires being worn out. These are minor things. Of course, they have to be addressed. But the major things like the buildings around the airports, which had to be removed many years back, are still there.
There are plenty of advertisements of multi-storied buildings coming up around New Mumbai. And the tagline is, watch a takeoff and landing of an aircraft 24/7. I really don't know in another 5 years' time, what is going to be the situation around New Mumbai airport. It is again going to be same like Mumbai, all high-rise buildings around it. There are regulations laid down as to what should be the distance, what should be the height. Shouldn't someone enforce it? The airports authority, the government, the DGCA, the collector of that particular district, everyone is responsible.
And well, moving on then, the Delhi High Court orders RSPL to remove certain derogatory phrases in its ad campaign of Ghadi detergent. This comes after HUL, the manufacturer of Surf Excel, filed a suit against RSPL. Nivedana is joining in with the details of that.
In a significant development, the Delhi High Court has ordered RSPL Limited, makers of Ghadi detergent, to remove certain derogatory phrases from its ad campaign. Now, according to the interim order dated June 20th, which was made public, RSPL has been ordered to withdraw parts of the ad campaign. In fact, the order came on a petition filed by Hindustan Unilever, which sought an injunction restraining RSPL from discharging the plaintiff's product Surf Excel detergent. And the court's vacation judge observed that certain phrases used were clearly derogatory and make negative innuendos. Phrases flagged include "ye dhoka hai" and "aapka karya badi badi baatein par dho nahi paate." Now, the court noted that comparative advertising is allowed, but mockery or misleading tactics cross a line. Now, let's also tell you that the matter is next scheduled to be heard on July 16th.
Thanks, Nivedana, for explaining that order. Now, moving on, in a move to drain additional liquidity in the banking system, the Reserve Bank of India announced it will hold a VRR on June 27. As per estimates, the current excess liquidity is pegged at rupees 2.4 trillion. Anurag Joshi is joining it with more details.
The Reserve Bank of India plans a 1 lakh crore rupee 7-day variable rate reverse repo auction on June 27. This will be the first auction of such kind since the RBI Governor Sanjay Malhotra took office in December 2024. The RBI plans to drain excess cash in the money markets from the VRRR auction. There is currently an excess liquidity in the banking system estimated around 2.4 trillion rupees. This is according to debt traders, and the cash availability in the banking system has surged through 2025 following cash infusions through the RBI's OMO auctions, and also the rise in cash levels in the banking system due to the RBI measures. The rupee debt yields are expected to rise on Wednesday morning following the RBI auction announcement.
And the pharma space is heating up, especially the weight loss segment. Danish drug giant Novo Nordisk is aiming to hit $1 billion in sales in India with its blockbuster weight loss drug Wegovy in 5 to 7 years. The drug is under distribution and will be in the pharmacies in a few days. The management believes pricing will remain competitive and offer value to consumers. Let's listen in.
Extremely competitive because, and I'm talking about the competition for, escalation of the doses from 0.25 to 1 milligram. So what we realized earlier in the GLP-1 when we launched, when people were going for increase of the dosage, it was costing, sometimes 30%, 40% and 50% more. So we said that it's just a journey where 0.25 has to go to 0.5 and to 1 milligram. Can we keep it at the same price? I'm really, really happy that we could able to work together and to find a solution which is single price from 0.25 to 1 milligram. And I call it something like a smart pricing for smart Indians.
And for my last question, I just want to understand the kind of market size that you're targeting with this product. It's priced at a particular level, and while the market is quite big in India, the pricing may not be perceived as affordable or, suitable for all of them. So specifically with your pricing, what is the kind of market that you're looking at? Any kind of projections that you have for how, in terms of sales, how you see this product perform?
To say that market is very big, the market is actually very small. The opportunity is big. And in that opportunity, I feel that we will play our strong role. Now, given the kind of the product it is, and it is still in the innovation space, we would like to keep the pricing which is very highly benchmark and competitive. And I feel that there are Indians who will be able to find the benefit. Now, the point is not about the cost. You just now heard that it's all about obesity is the gateway for many of the complications. The burden of obesity is going to be 1.57% of the GDP. Now, if that is costly, or the price of this product per week, 4,336 costly, I think that is subject for a debate. And this price, this cost of this obesity is only going to increase over a period of time. So I think it's priced very good for the value it gives to the patient.
Is big in India. And moving on to an ET Now exclusive, State Bank of India is seeking to raise its equity stake in SBI General Insurance, and that will happen by 5% to 75%. Sources inform ET Now Warburg Pincus is selling 10% of its holding to the insurer, to SBI, and Premji Investor, which is also buying another 5% from the PE investor. My colleague Anurag Shah is joining it with more details.
State Bank of India is increasing stake in general insurance subsidiary SBI General Insurance by 5%. Presently, SBI holds around 70% stake in SBI General, and after additional 5%, bank stake would be at 75%. Premji Invest is also acquiring additional 5% stake. So, private equity firm Warburg Pincus is selling 10% stake, and which is getting acquired by Premji Invest and SBI 5% each. As per our sources, valuation of SBI General is at 35,000 crore. So, SBI would be paying around 1,750 crore for additional 5% stake. If we talk about the gross return premium, then in FY25, the SBI General Insurance has seen a growth of 11% in a gross return premium. Company holds around 4.3% market share in non-life space, and there is a plan of public listing also as per our sources. By FY27, there is a plan to list SBI General Insurance. So one more development in a general insurance space where SBI only acquiring additional stake in their subsidiary SBI General Insurance.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Avenue supermarkets can be in focus, where company has opened a new store in Tiruvallur, Tamil Nadu, and with this the total count of the store count of the company stand at 422. Moving to next, rights can be in focus, where company has bagged 29 crore contract from Gujarat Urban Development Company for TPI services. So back of these rights can be in focus. And lastly, Infosys can be in focus, where Infosys has announced a strategic collaboration with Zoetis to enhance digital capabilities, and Zoetis to benefit from greater agility and efficiency to support business growth. So back of this, Infosys can be in focus.
Thanks, Ravinder, for listing out all those stocks. And Pulkit is also here to decode the F&O data and how you should build up your position based on that data interpretation. Pulkit, take it away.
Talk about India VIX. The current level of India VIX is around 13.64, and yesterday when we were discussing at this time, it was around 14.04. If we talk about the PCR changes, that is put call ratio, so it is currently trading around 0.86 for Nifty, and for Bank Nifty it is around 0.8. Both the positions are in a comfortable range, so no need to worry about it. If we talk about Nifty index futures change in open interest, so it has increased by 15.77%, and the trend is around long build up. If we talk about most active call and put in Nifty, so the strike price of 25,200 has been seen as the most active strike price for both put and call. If we talk about the trend, for call it was call buying, and for the put it was put writing. So and the highest open interest for Nifty was on the put side, it was around 24,000, and for the call side it was around 26,000. The next is Bank Nifty. For Bank Nifty, the change in index future has decreased by 4.63%, and the trend was short covering. If we talk about the highest open interest towards Bank Nifty, so for put it was 56,000, and for call as well it is 56,000 only. The long and short position for FII, the long position is around 22.87%. For DII, it is around 64.37%, and for retail, it is around 61.88%. So if we talk about the securities that are in ban, so only one security is in ban, and that is Titagarh. So this is these are the cues for F&O.
All right, thank you so much for joining us with those details. But moving on to the counter that is going to be in focus today, Vodafone Idea that has clarified that it has not received any communication from the government regarding reported relief on its AGR dues. Pulkit is joining us with the details.
Yeah. In yesterday's session, we saw that Vodafone has gained around 5% on the speculated news of relief regarding the AGR dues of somewhere around 84,000 crore. But it was due to it was a kind of a speculated news, and multiple ways were rumored that government can convert the compound interest to simple interest, or the time can be increased from 6 years to 20 years. But in the evening, Vodafone gave its disclosure, and in disclosure they have clarified that there was no communication between government and Vodafone Idea regarding these kind of relief. So all the rumors were baseless. So now today it will be great to see how the Vodafone Idea performs after its disclosure.
Pulkit for all those details. And now moving on, Hindalco is all set to acquire Aluchem companies for an enterprise value of $125 million. The Aluchem acquisition will be carried out through Aditya Holdings, which is a step-down wholly owned subsidiary of Hindalco. Ashesha is joining with all those details.
Well, yes, Hindalco has announced an acquisition. It's a 1,000 crore acquisition, not a very big one in terms of the size of the company, but a strategically important one, says the company. Hindalco said that it will be acquiring 100% equity stake in US-based Aluchem Companies Inc. Now, the acquisition is likely to be completed by the end of the next quarter, and it's a $125 million acquisition, which translates to about 1,080 odd crores in Indian rupees. Now, this company, remember, is a prominent manufacturer of specialty alumina. And the company says, Hindalco says, it marks significant investment in specialty alumina for Hindalco company, and it also says that it marks key step in scaling its high-value technology-led materials portfolio. So if we consider the size of the company, the acquisition is not very big, but it marks its entry into the North American region. In fact, they also say that Hindalco currently operates about 500,000 tons of specialty alumina capacity. It plans to scale it up to 1 million tons by 2030. Some important management commentary that has come in from Kumar Mangalam Birla as well, who is the chairman of Aditya Birla Group, where he said that this is a strategic foray into the specialty alumina space, and this will not only accelerate the development of future trade sustainable solutions, but it will also open pathways to the company for exploring further in this particular segment. So yes, a 1,000 crore acquisition that has been done by Hindalco, the company in focus on the back of that.
All right, Hindalco is going to be in focus on the back of that, but India's market veterans are spotting value in financials, particularly in the mid-sized banks and NBFCs. Madhu Kela is bullish on small NBFCs amid tighter regulations, while Ramdev Agarwal expects 18 to 20% growth in well-managed mid-tier banks. Prashant Jain also sees a decent value across banks. Let's listen in to what these veterans had to say.
Positive on select NBFC companies because the overall regulatory framework for the NBFC sector has dramatically improved in the last 3-4 months. The rate cut has boosted their liquidity availability in the market because deposits going down. Suddenly we see there is a lot of liquidity available for these companies, and a lot of these companies have tightened their belt significantly in the last 3-4 years in the very tight regulatory regime. So I think this is maybe just the beginning for this sector, which has not done too much maybe in the last 3-4 years.
Banking on the whole, the kind of policy we are seeing, the regulator wants higher growth, credit growth rate. So if the 13-14%, if they go back to the trend credit growth rate, in that case, mid-sized banks, well-managed banks, they will grow at about 18-20% or more than that. So yes, I mean, there are a whole lot of sectors who will definitely grow. I mean, almost like 1.5 times of nominal GDP growth rates.
I still feel on the margin, banks look a little better, utilities look a little better, the consumer discretionary looks all right to me. Pharmaceuticals based on individual companies is promising. And what we are underweight is basically consumer staples and large IT. Some themes will grow faster, of course. I mean, Make in India is a very powerful theme, and defense is, of course, a very powerful theme. So these themes will definitely grow. Digital businesses is a very powerful theme. They will continue to outpace the GDP growth by a wide margin.
With this, it's time to say goodbye. In this edition of Market Cafe, GIFT Nifty is indicating more than 100 points positive starts comfortably. But how to navigate for further? Watch the markets coming up next.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat